All right, let's jump straight into this incredible balancing act India's regulators are trying to pull off as of April 2026. On one hand, they are doing absolutely everything they can to turbocharge economic growth, right? But on the other hand, they're building these massive, unprecedented digital walls to shield our wallets from some seriously high-tech threats. It's a fascinating dynamic, and in this explainer, we're going to break down exactly what these shifts mean for the broader economy, and more importantly, for you. Here's a quick look at what we're covering today. We'll start with the big macroeconomic picture. Look at how trade is getting a boost, dive into the crazy new digital fraud protections, check out some personal finance upgrades, and finally, tackle the emerging AI cyber threats that have everyone on edge. Part 1, the macroeconomic picture. Growth versus rankings. Okay, so there is a wildly fascinating contradiction happening right now at the global level. The World Bank is incredibly optimistic. They literally just raised India's growth forecast to a really robust 6.6% for the 2026 to 2027 fiscal year. That means India firmly maintains its status as the fastest growing major economy in the world. But in stark contrast to that, the IMF's April 2026 report just officially dropped India's GDP ranking down to the 6th spot globally, putting us right behind the UK. So wait, how can we be the fastest growing, yet slipping in the ranks? Well, if you look closely, this drop isn't some sudden economic collapse. Actually, it's more of a statistical quirk. You see, the IMF gave India's national statistics a C grade simply because the valuation is based on an outdated 2011 base year. Add to that the recent depreciation of the rupee against the US dollar, and since the IMF ranks the globe in dollar terms, our relative valuation took a temporary hit. But don't panic. The underlying economic engine is absolutely roaring. In fact, that exact same IMF report projects India will surpass Japan by 2028 and reclaim the third spot globally by 2031. Anchoring this entire, slightly mixed macroeconomic picture is the Reserve Bank of India. They're keeping a remarkably steady hand, holding the repo rate perfectly neutral at 5.25%. By doing this, the Monetary Policy Committee is carefully, almost surgically balancing the need to fuel this economic growth against the persistent risks of inflation. They are basically signaling to the market that they're relying strictly on hard data moving forward. Moving right along to Section 2, boosting trade and markets, and how regulators are streamlining growth. So how exactly does this stable foundation translate into strategies for domestic business? Well, previously, if you were an e-commerce exporter, you hit a hard, frustrating ceiling, a 10 lakh rupee value cap per consignment. It was a massive logistics bottleneck. But as of April 1st, 2026, the Central Board of Indirect Taxes and Customs completely axed that cap. No more value ceiling on courier exports. Plus, they've slashed the disposal times for unclaimed imports from 30 days down to just 15. This is just a massive, massive win for the ease of doing business. It's perfectly designed to let the e-commerce sector truly take off. And you know, this push for modernization isn't just for e-commerce. It extends to our core commodity markets too. CB just gave the green light to the Multi-Commodity Exchange, or MCX, to set up a dedicated coal exchange with a pretty huge 100 crore rupee initial investment. By moving coal trading to a transparent, centralized exchange, we finally get true market-driven price discovery instead of relying on opaque, behind-closed-doors pricing mechanisms. It's a real game-changer for transparency. Section 3. New Digital Fraud Protections, or as I like to call it, the RBI Shield. Now we're pivoting from the big macro markets directly to you, the consumer. And I need to share a number that is honestly tough to swallow. Last year, digital fraud losses in India crossed a staggering 22,000 crore rupees. Let that sink in. As our digital payment systems get faster and entirely frictionless, the scammers are getting faster too. And this astronomical figure is exactly what forced the RBI to step in and propose some truly radical, out-of-the-box safeguards to protect our money. Case in point, here's one of the most innovative proposals they've cooked up, the 1-hour fraud window. We've all had that moment, right? You send a large chunk of money to the wrong person, or worse, you realize you've just been scammed and boom, the money is just instantly gone. But under this new timeline, if you initiate a first-time transfer over 10,000 rupees to a brand new beneficiary, the money doesn't clear right away. From minute 2 all the way to minute 59, you have a literal panic window. During this hour, you have the power to just hit cancel and stop the transfer entirely. It only clears at minute 60. They're adding a tiny bit of friction to save you from absolute disaster. Then there's this really clever new concept called shadow credit. Regulators are cracking down incredibly hard on money mules, you know, those accounts specifically used to receive and wash scammed funds. So they're proposing a mechanism where if an individual or small business account receives annual aggregate credits exceeding 25 lakh rupees, anything over that threshold is temporarily frozen as a shadow credit. The account holder then has 30 days to legally justify where those funds came from before they can actually access a single rupee of it. But arguably the most empowering tool in this whole lineup is the kill switch. The RBI is essentially mandating that every bank provides an instant one-step digital panic button. If you suspect your accounts are compromised, you don't have to frantically call customer service and wait on hold while your savings are drained. No way. With one single click, this switch immediately disables all of your digital payment channels. It completely locks down your financial life until you know for sure that you are safe. That brings us to Section 4, upgrading personal finance for speed and convenience. So while the regulators are busy building walls and adding friction for fraudsters, they're simultaneously removing the friction for your trusted everyday transactions. Your e-mandate limits, those digital auto-deduct instructions you set up, have absolutely surged. For general autopay, the limit without needing an OTP is now up to 15,000 rupees. But look at the heavy hitters: mutual fund SIPs, insurance premiums, and credit card bills. You can now set up auto payments for these up to a massive 1 lakh rupees without having to punch in an OTP every single time. It makes responsible, long-term financial planning completely seamless. Also, we have to talk about how the government's BHIM app has evolved. It is way beyond just sending and receiving pocket money now. They've integrated free TransUnion CIBIL score and credit information report tracking directly into the app. And the best part? It's accessible in over 15 regional languages. The whole strategy here is brilliant. They want to push credit awareness and financial literacy deep into semi-urban and rural areas where English isn't the primary language. It's all about democratizing access to your own financial health. Finally, Section 5, emerging AI cyber threats, the next frontier. As our financial lives become entirely frictionless and digital, a genuinely terrifying new threat is brewing on the horizon. The RBI is deeply, deeply concerned about advanced generative AI. They specifically pointed to new artificial intelligence models like Anthropic's Mythos. According to their preliminary assessments, these advanced models could rapidly crack the very data localization and encryption systems that are basically holding our entire digital economy together. By accelerating how quickly bad actors find vulnerabilities, these AIs could lead to massive data breaches at a scale we've literally never seen before. So as we wrap up this explainer, I want to leave you with this one critical thought. As artificial intelligence moves exponentially faster than any government regulation could ever possibly hope to keep up with, are manual tools like a one-click kill switch truly going to be enough to protect our digital future? Or are we just putting a Band-Aid on the symptoms while a massive cyberstorm gathers just out of sight? It's absolutely crucial we all start asking these questions as we navigate this wild new landscape. Thanks so much for joining me to unpack this and keep learning.